Welcome to Market Day Report. Welcome to another week. Okay, kind of an interesting week. It's a 4-day trading week as Friday is Good Friday and it's a market holiday, so no trading on Friday. Everything has to wrap up by Thursday. Okay, so how are we starting this week? Overnight session. Let's go to the corn market and we'll start with the May 3.5 lower, 486 3/4, while the new crop 3 ticks lower, 462 3/4. What about beans in the overnight session? New crop up 3 at 1028.5. And the wheat market, Chicago, July 8.5 lower, 561 3/4. Hard red, July contract down 12.25, 571. And then the spring wheat, December 650.5 off 7.25 after a higher close for all three of those markets, the wheat markets on Friday. Cotton market, well, in the overnight session down 52 points at 67.99. Now the new crop on Friday was higher while the old crop settled lower and will extend those losses into the overnight session. All right. Let's go to Missouri. Brian Hoops, Midwest Market Solutions. Brian, welcome back to another trade week. What are you watching?
Well, good morning. Hope you had a good weekend, Tony. It is an abbreviated trading week as we have the Good Friday and Easter holiday this weekend. So grain markets will close normal time on Thursday, will not reopen on Thursday night or all day on Friday. Now, there will be equity markets, metals markets, gold and silver trade. The crude oil will trade on Friday, but not any grain trade or livestock trade. So coming out of the weekend in here, we're seeing just a little bit of pressure against some of the old crop corn and soybean contracts, good rains in the forecast for Brazil is putting a little pressure against our corn market. We did have a private sale this morning to report 120,000 corn to Japan. So that will offset some of that rain that's in the forecast for Brazil. But otherwise, it looks kind of like a choppy week where the market's trying to find that near-term direction. Weather looks mostly wide open, except for some rains Thursday, Friday, Saturday, across the winter wheat belt. Otherwise, it looks pretty open for a lot of planting in a lot of areas to really start to ramp up. We've talked to a lot of clients who are already planting, and this week should get even more people out in the field. So, it's a market that I think it wants to find that direction, find what the winter wheat conditions are saying this afternoon, which probably will be down a little bit. But with the rain in the forecast, that offsets some of that friendliness, and we're seeing winter wheat prices trade lower in the overnight.
You know, one of the things that contributed to a lot of the volatility last week, not talking about the headlines, but the stock market, the equities, I mean, roller coaster ride. Do you expect that to continue this week?
Well, I think we're very subject to any tweets or anything that comes out of the White House changing price direction on us. It was just over the weekend, there was a lot of confusion about if semiconductors and some of the computer chips that are coming out of China would be tariffed or not tariffed. And that has given way to some buying interest this morning. But we did gap higher overnight, filled that gap, and the equity markets continue to extend the rally. We're getting into near the highs from last week. And so those act as very important areas. Certainly that's going to help out the cattle market this morning and probably to a lesser extent the grains. But it does seem like the grain markets have kind of moved on from a lot of the tariff, a lot of the equity news, and moved on to their own fundamentals, trying to find that that supply and demand equilibrium of how much corn we're going to plant. And we may plant a lot of corn this spring, especially at a very fast pace. Do we need to keep this premium that we have in the market at this time frame?
Yeah, just rolling through the equities there beside us as we get ready to open the market for the day. And you threw cattle in there. So how about we take a break and we'll come back in a moment. When we do, we will talk cattle and hogs. Market Day Report continues in a moment. Cash cattle last week, 204 in the south, 208 in the north. Now the north down $2 to $7. However, the south, very light trade as Packers really having a difficult time finding anybody to sell at lower prices. So how did we end up with the futures markets? Live cattle futures, $1.62 higher on the April, 202.47. Note the 196.80 in June, up $1.60. Everything else 193 to 195. Over to the feeders, front month 285.17. That was 240 higher with a 283.67 on the August, up 375. Finally, hog trade with the June contract up 15 at 93.32. Brian Hoops, Midwest Market Solutions, thoughts?
Well, it's going to be an unusual week because it has a Friday holiday this week, and so no trade, but it's also cattle and feed report week. So that report comes out on Thursday. That's going to be very unusual for us in the industry. Usually it's on a Friday, but that's at 2 o'clock Thursday afternoon. Looking at placements, maybe 6 to 7% larger than a year ago. On feed numbers down a little bit from last year, and marketing's down just a little bit as well. So it doesn't look like a real super bullish report because of the placement numbers, but numbers are still tight. Now, when the show lists are announced later this afternoon, don't be surprised if those are increased compared to the previous week. There's probably a few cattle carried over from last week into this week's show list, just because those feedlots, as you mentioned, don't want to sell at that cheaper money that was being offered by the Packers. So we haven't seen any bids. Cash is probably going to be steady to lower type calls than what we saw a week ago, but it is that holiday shortened week. We just may have a kind of a standoff once again until we get to that cattle on feed report near the end of the week before we see much in the cash cattle trade. But hopefully we can start off a little bit stronger here this morning. Looking at the equity markets, I think that'll what will trigger us to higher prices, kind of ignoring those softer cutout values and softer cash trade from last week.
All right, Brian, before we go, crude oil moving higher again today. We look like we were headed below that $60 range, but strengthening back up. Any final thoughts here?
I do think we could get into the mid 60s again before we find a lot of resistance in the June contract. But, this administration does not want higher energy prices. They want lower prices. And I think we probably will dip below 60 at some point here in the relatively near future. But first, we may go hit some resistance, some retracement levels, and then turn around and take it lower again.
Yeah, gasoline, diesel, all moving higher. And the nat gas market, which has been in the red last week, this month, and all of this year, actually has lost 52% of its value over the past 3 years, is in higher territory. Brian Hoops is with Midwest Market Solutions. We'll see you back here on Wednesday, and that's how we set up to trade today.